Hey guys, in this video, I'll be talking about how you can start investing in the stock market, breaking it down on what it is and how exactly to do so while detailing helpful strategies to start earning money and creating wealth. If you watch this video to the end, you will develop a sound understanding of the stock market and a strong foundation to effectively begin investing. Before we go on, please make sure you hit the like and subscribe button for the YouTube algorithm as it really helps the channel. So first off, what is a stock? A stock is a piece of ownership in a company. When you buy a stock, you now own a very small slice of that company. You would buy stock in a company because you know what they do and believe that they will do great things in the future. If they do perform well, the company becomes more valuable, which makes the stock prices increase, and you will make money just by holding on to that company's stock. Why do companies sell stocks? Companies sell stocks to the public as a way to generate income for their operations. A company usually receives their initial funding through private investors. After a certain point, a company may decide to sell company stock instead of receiving private funding and go public as in list themselves on the public stock exchange. Now let's look at a stock. I will now interchangeably use the terms shares and stocks. Essentially, they refer to the same thing. Here's an example of Disney stock. Disney is a worldwide entertainment company that is popular for its amusement parks, films, merchandise, and streaming service Disney+. The cost of one share of Disney at the time of this recording is $186.02. Let's say you buy one share of Disney stock for $186.02. A year from now, Disney continues to do well in business and their share price increases to $200 per share because the company becomes more valuable and is doing great. Just from you holding one share of Disney at $186.02, you have gained about $13.98. That is an example of how you can earn money from investing in the stock market when you buy, hold, and sell a stock. Now, how do you buy stocks? To buy stocks, you would use a brokerage. A brokerage serves as a middleman between a buyer and a seller to facilitate a transaction. Now, there are many brokerage apps out there, and as a beginner, you can't really go wrong with any of them. Apps may differ in advanced trading features, user interface, and color scheme. However, if they are widely used and well known, they essentially serve you to do the same thing, which is to buy, hold, and sell stocks. So choose whatever you feel like. There are two brokerage apps which I highly recommend and personally use, which are Webull and Robinhood. They're both free to use, have beginner-friendly user interfaces, and are a breeze to use and navigate with. With Webull, they're giving out 2 free stocks when you open an account with them and deposit $100, which can be worth up to $1,650. With that, since you're opening up a new account, think of it as free money, since you could hold on to the stocks or sell them and use the funds to invest in companies of your choosing. So I'll put a link in the description below on how you can get those 2 free stocks from Webull. I currently use Webull, Robinhood, Vanguard, and Fidelity. I also use Coinbase and Crypto for my cryptocurrency investments. Feel free to open up multiple brokerage accounts if you prefer, or just want to try new ones. Now for the sign-up process, every brokerage's sign-up process will ask you for personal information. They will verify your age, address, social security number, and so on. After turning in an application, they will review it, which will usually take a few days to approve, whereafter you could log in and begin looking at companies that you're interested in to invest in and start organizing your investment portfolio. I use multiple brokerages as a preference for how I like to organize my investments. My Vanguard is used for my retirement account, Webull and Robinhood are for my short to long-term holds and riskier trades, and Fidelity for investments where I won't touch for a very, very long time. Now, how do you make money from stocks? There are 2 main ways to earn money from investing in stocks. Earlier, I showed an example of buying one share of Disney, and a year later, the value of it increased. When you buy a stock and hold it over a period of time, and sell it when it has increased in value, you earn a profit. This is a term called capital gain. It is how most investors earn through the stock market, which broken down is simply buy, hold, and sell. You may also hear time to time of the phrase buy low, sell high. The second way is through dividend investing. A dividend is a small percentage of a company's profits, which they give and pay out to their investors throughout the year as a token of appreciation in funding their business ventures. When you get into dividend investing, you're seeking out companies that pay a dividend. At the same time, you may earn capital gains from the stock price of that company when it increases. Dividends can be seen as a nice bonus from a company for just investing in them. The majority of dividends are paid out quarterly. AT&T, for example, costs $31.35 per share and pays a 6.64% dividend yield at the time of this recording. The dividend amount you receive is calculated by the share price multiplied by the dividend yield percent. So $31.35 times 0.0664 equals $2.08 per year. AT&T pays out their dividend quarterly, so every quarter you would receive 52 cents. Not all companies pay a dividend, however, due to their own preferences and business structure. Well-known companies like Facebook, Tesla, Amazon, do not pay a dividend. You can find this information through a quick Google search or on your brokerage app when you look at a specific company. Other ways to profit in stocks are day trading and swing trading. Swing trading is buying stocks and holding them for a short to medium amount of time, think days or weeks, and selling them after they have increased in value. This style focuses on stocks whose price may rise in the short term and suitable for those who want to realize profit sooner. Let's look at Tesla stock. One share of Tesla on April 9th, 2021 was worth $677.02. 4 days later, on April 13th, 2021, it was worth $762.32. If you bought one Tesla share on April 9th and sold it a few days later when the price increased, you would have done a swing trade and earned a profit of about $85. Day trading is another method of profiting from stocks. This method is quite risky. Day trading is when you buy stocks, then minutes or hours later of the same day, you sell to obtain profits. Swing trading and day trading require more advanced knowledge and understanding of the companies that one chooses to do this with. You would also have to be in a position to handle the risk tolerance for the stock market and the volatility that it brings. You have to be more present to monitor your stocks and active to engage in these methods. How exactly do you pick stocks to invest in? Now, there are many different things that you can invest in, and one very good choice for beginners to start investing in would be index funds. An index fund is a bundle of individual companies combined into a single investment. These index funds include a mix of the country's largest companies. So imagine you owning a piece in multiple companies just by buying one share of an index fund. By owning multiple companies, this makes index funds a significantly less risky investment versus investing in one individual company. If one company in an index fund isn't performing very well, you own hundreds of others that are steady and growing in the index fund. These index funds are created by highly reputable investment management companies to provide investors an easy way to own a diverse portfolio with long-term returns. These are very convenient investments because they are historically reliable. You can buy index funds, hold them, and forget them as they grow. It is definitely a great choice if you don't want to go through the hassle of researching individual companies and have a safe, secure investment that brings steady gains over a long period of time. The next most popular way is investing in individual companies. This method helps you learn more about companies and what you are exactly investing in. Starting off, I recommend researching about companies that you are familiar with and really like. Perhaps one you encounter or use day to day. After identifying those, you'd want to research them to find out if investing in them is a good idea. You want to invest in companies that you understand, know what they do, and believe that will do well in the future. You may want to further study how they exactly earn money, who their CEO is, read their financials and earnings, and learn how to do fundamental and technical analysis. Most likely the companies you are familiar with are strong, successful, and famous companies that will likely continue to see great future growth. These companies are blue chip companies, which are highly recognizable and financially sound in the market. Apple, Coca-Cola, and Microsoft are examples of blue chip companies. A variety of resources can be used to help your decisions and improve your investment skills, such as reading, watching videos, joining Facebook or Discord groups where other investors share knowledge, and Yahoo Finance to see technical details of companies. Now, you can invest in what you like. There's no right way to invest in the stock market. Perhaps you only want to invest in index funds. Maybe you want to invest into more highly volatile companies that have tremendous growth potential. You may want to only invest in companies that pay dividends, or maybe have a combination of those who do pay dividends and do not. Over time, you will develop your own investing style that works best for you. Now, what are the tax implications for when you sell a stock? Whenever you sell a stock for more than you paid for it to realize a capital gain, you will be taxed for it. A good indicator for when you should sell a stock is to sell after 1 year or longer because you will get taxed less. This is considered a long-term capital gain on a stock, and the tax amount can be 0, 15, or 20% depending on your income level. With short-term capital gains, as in stocks sold before 1 year of holding them, you will pay ordinary income tax on your sale, which can be up to 37% depending on your tax bracket. Investopedia.com has some great charts that depict different tax rates for different filing statuses and income brackets when investing. This applies to taxable brokerage accounts, as retirement accounts differ. However, the key point is that there are taxes whenever you buy and sell a stock, and holding long-term reduces the tax amount. The benefits of learning and investing in the stock market outweigh this because it provides a great opportunity to generate wealth that you would not be able to obtain if you decided not to delve into it. Now, some key takeaways from this video is that the best time to start investing was yesterday. You'd want to start investing now, so month after month, year after year, your investment in wealth compounds and grows. Not only your wealth and assets, but your knowledge as well with investing and financial literacy. Building wealth takes time, so by delving into investing now will have you reap huge benefits in the future. Also know that time in the market beats timing the market. Your investments will fluctuate up and down as you hold on to them. The stock market is unpredictable and volatile. There may be a big drop or it can go to record highs. No one really knows. Ideally, you just want to keep holding and be patient for your investments to grow in the long term. Another thing to do is to not immediately pour all your money into investing at first. Start with a little bit at a time and adjust as you see fit. This ties in with a popular investing strategy called dollar cost averaging, which is buying a bit of stocks from time to time, because even when the prices fluctuate, in the long run, the average price of your stock investments balance out. Lastly, continue to research and learn about investing. Books, videos, articles, and discussions are helpful in growing your knowledge of investing. This will no doubt help you gain more wealth and help you make wiser investment decisions. There are many headlines and people telling you to invest in this or that. So when investing, always make sure you do your own due diligence and research from different sources you trust. If you haven't signed up for a brokerage already, I definitely recommend Webull. The link is in the description, which will give you 2 free stocks worth up to $1,650. If you found this video, you probably heard throughout your life on the news and social media about people trading and investing stocks and earning money. You then became very curious about what it is all about. It sounds like a challenging, confusing thing to do and something that you never really considered before. I thought it was only something that rich, fancy people on Wall Street wearing suits and in offices do like you see in the movies. I also thought I had to learn a lot of complex math, percentages, and business jargon, or else I was going to make grave mistakes investing in the stock market. I quickly learned that wasn't the case, and that learning how to invest in the stock market is a very approachable, rewarding, and excellent skill for anyone interested to create a new stream of income to grow your wealth. You also don't need to have a lot of money to start. You don't need hundreds or thousands of dollars, and you can start with as little as $5 or $10 just to try it out. Now, I hope this guide will help jumpstart your investing journey. If you like this video, please like and subscribe to watch more videos just like this. I make videos on personal finance, entrepreneurship, and investing. My goal is to give as much value as I can and help others with my experiences and knowledge. Thank you, and I'll see you all in the next video.